the JSE and Rand are upbeat so far today, with the index up 1.16% and the Rand firmer at 18 Rand 83 to the dollar. Now, the JSE is trading higher, marking the second successive session of gains. Meanwhile, investors are closely monitoring more economic data and policy decisions from central banks. Grant Nader, Senior Portfolio Manager at Benguela Global Fund Managers, joins us now for a market review of the latest trade sentiments. Grant, a very good afternoon to you. Thank you for your time. The Rand is finally trading below that 19 Rand to the dollar mark. Does this mean we're out of the woods?
Good afternoon, Paul. Well, I think it's a little early to say we're out of the woods, given the kind of year we have ahead of us. But I think in terms of what's happening on a macro scale and globally, things are moving in our favor, and that's really positive. I think we have some own goals that we've historically scored, but it's very good to see the Rand as recently as it was 1920. It's sitting at around 1884, somewhere around there, so that's positive. And really some of that has been driven by we saw China start to stimulate their economy once again. That's been one of the bigger challenges. They've been slowing in their growth, and that's been dragging commodities, which are so important for our Rand and our terms of trade. So that's been a positive. And in addition to that, we've seen the dollar weakening against some of the other major currencies, and that's also helping the Rand. So there's generally a number of things that are indicating some positive sentiment, and hopefully they're going to be sustainable as we move through the next few months.
Now, annual consumer price inflation pulled back in December, easing to 5.1% from 5.5% in November and 5.9% in October. Talk us through some of the factors influencing this data.
So first of all, that was very encouraging, and I think what I liked about it was we saw food continue to decline. So the food inflation dropped to 8.5 from 9 in November. Now that's of course excluded from the core CPI that the Reserve Bank looks at, but it's not excluded from the basket that we shop with. So for us it's real. Transport index only grew 2.6% for the full year, and if we look back to 2022, it grew at over 13%. So if you think about the consumer, the type of impact on the wallet and on their spending, those are both very positive. A number of other food categories were lower. And so the core trend is moving in the right direction, and I found that very encouraging. It's the third month in a row it's moving down. Core CPI is sitting at 4.5, which is smack bang in the middle of the Reserve Bank's targeted range between 3 and 6. So that at least bodes some positive. That's positive for the prospects of rate cuts later on in the year. So I think all round it was a good number, and I think it's improving in areas that matter to consumers that we feel on a daily basis. So I'm very encouraged by the numbers.
And looking at company news, the Foschini Group has a trading update for 2024, and the 9 months ended December the 30th in 2023. Help us make sense of these numbers.
So those are actually very good numbers in relation to what was expected. I thought, if you look at Australia and you look at and the UK, those have been performing well, but in this particular update, they were down year on year in their revenue. But the important thing to remember is they had a very high base. So they had the post-COVID, recovery in sales that set a very high benchmark. So in relation to that, that was a good number. TFG Africa actually delivered. So they had a disappointing couple of months, but December gathered some strong momentum, growing at over 11%. So that was very good to see. Their cash sales are growing. So it looks like Black Friday did hurt them in terms of it was a disappointment, but there seemed to have been an offset in terms of December. Consumers came back. They had a very strong December, and they had, if they're looking forward in terms of what their outlook is, they actually see things are going to remain difficult. Things are going to remain challenging, but load shedding is easing, and that's a positive. That should improve their outlook. We saw their their online sales growing at nearly 30%, and that's very encouraging. It's almost 10% of their business now. So they have a very strong online platform offering, and that's something to take apart from. And we saw also something very important. We saw some margin recovery, and I expect to see this across most of the retailers. In this particular case, they were discounting a lot of their inventory over the past few months, trying to reduce their stock levels. That's now in the base, and we started to see some margin recovery. So all round, we're very encouraged by the update.
What about Quilter's fourth quarter 2023 trading statement? That's also out. What does that performance look like?
That was a surprisingly good number. They came in ahead of pretty much all expectations. They've had like most asset managers, especially the listed ones, you've seen sequential outflows in assets under management and administration. And what they saw was a strong inflow, and I think it was against expectations. So they saw strong inflows of funds, both under administration and management, of 5 and 7%. So that's very positive. And it does show that perhaps they're getting their offering right in terms of their platform and in terms of pricing and competitiveness. And that sets them up well. If we see a positive market this year, if we see an improving market in the UK, that should actually drive further asset inflows into the business. So a positive update.
Very well. Thank you so much for that. Of course, giving us a breakdown of the latest in the world of business and a market update that was Senior Portfolio Manager at Benguela Global Fund Managers, Grant Nader.